Good day traders, Stacey Burke from Stacey Burke Trading. Today we're just going to review a bit more detail in terms of the day-to-day preparation. What I look at, the 12 candle rule, we talked about the stop hunts, the market maker template, just basically keeping things as simple as possible, and also just looking for ideal playbook setups. It requires patience, it requires you studying and learning the different nuances that the market makers or smart money or whatever you want to call it are going to throw at you, and then getting better and better at executing 2 or 3 of those trade setups, starting to identify the patterns that are there, and just keeping things simple so that you can duplicate them. We talked about that 12 candle window for me of where I have that 3-hour window and I focus on 12 candles. And again, when you do that over and over and over and over again, and you're focusing on the high and the low of the day, things start to make a bit more sense, and then it boils down to you being able to execute in live time what you see is happening, and also placing your stops, managing your stop loss throughout the trade, setting your targets, and just keeping things very simple so that you can duplicate that and look at a simple process. So each single day I go through my basic market structure, the questions I go through. What is the overall market structure? Are we in an up, down, sideways market? Are we in level 1, 2, 3 in terms of the Monday to Friday cycle? Are there any significant price levels, double zeros, 50, 25, 75? Any major news scheduled? I just take a quick look at my schedule previous to the week. I have each day working backwards from the end of the week. I know sort of which news events are already going to be coming out, and I potentially will look for the market to be setting up going into the news in a lot of cases to offer ideal patterns that may give us a really good risk-reward setup. Then, of course, as we come into the last third of Asia, based on what we've already sort of identified, we are looking at what are the best levels to trade from. You'll find that, again, the blue box is the iSessions indicator, which I'll include the link for below. It's just a free indicator. I set the times myself based on the Asia high-low. And then the orange box is my end of my 12 candle rule prior to going into the 8 a.m. to 11 a.m. New York Standard Time, Eastern Standard Time. But my main focus is the 2 a.m. to 5 a.m. New York Eastern Standard Time, where the Europe and London markets start to trade. So looking at what are potentially the best levels to trade from. And again, these number levels are just a sweet spots indicator. I'll include that below. It's a free indicator. It shows me the 25 pip increments that I like to have on my charts. And this is it. There's no moving averages, no other indicators. This is just how I like to trade. Lots of people use other things, and that's no problem at all. Whatever works for you. This is just how I do it. So when London, the little green box is the first 2 hours, the first 2 candles of London. This is a 15-minute chart, so that's the first 2 candles of the 4 a.m. and 4:15 a.m. New York candles of the London market open. My stop loss, what am I going to be risking? Usually that's going to be no more than 15 pips on any trade. If it's more than 15, I'm dead wrong, unless I've gotten a really terrible fill, which typically I usually won't take a trade. If I've missed it, I'll just come back later for the US market, or just accept that I've possibly missed the trade for that session. Then my targets, a lot of these trades I'll be targeting 50 pips, sometimes more, depending on where I've been filled. If it's been at the numbers, I may target more than 50, but usually it's 50 or a measured move of a high and low. So typically a high and a low, I'll take 2 times that measurement as a potential profit target. But again, it depends on the overall template that we're in and how that market has set up and traded for that session. But usually 50 pips or a high or low, whichever comes first. If it's 42 pips as a previous low or high as a profit target, I will take usually the high or low as the profit target. When will I move my stop to break even? I will always move my stop to break even once a previous high or low has been hit. I automatically will move my stop to break even. If there is no high or low there, 25 pips typically will be a range of movement that to me represents enough market movement that I should be going to break even, and that is a crucial rule, as that is the most vulnerable place for the market to potentially stop and reverse and come back against you. I don't add to positions. I usually just take one lot, one package as an entry. I don't add in, but other traders may want to do that. If they're holding on to a swing trade or there's a consolidation, they may want to add in other positions. Again, as I said, I don't typically like to do that. I focus on this 12 candles that follows the blue box, which is the Asia high low, and each day I mark off the previous most recent swing low and swing high from the previous day. Those levels are important. Again, we talk about three things that markets do. They break out, they consolidate, fill more orders, and continue. They break out, they pull back and reverse. That's our false break reversal to the other side of the range. And they break out, they pull back, and they go into a range-bound market. That is all markets do. And when you start to identify with the high of the day and the low of the day, wherever you're at, it's always about how the market reacts and trades around the high and the low. And so that 12 candle rule for me is critical each day for how the market will trade going into the end of the Asia session. We have highs and lows, and if the market makes a new high, that becomes a significant price level for potential selling. Or if the market breaks through, it gives us an opportunity to look at a way to position ourselves to be going back in the original direction of the trend. So each day within that first 12 candles, I look for the candle confirmation patterns, whether that's pin bars, railroad tracks, but I want to be looking at how the market trades around the highs and the lows. That is the most critical factor. Each and every day, outside of that Asia box, we will typically see the market set up throughout Asia based on the highs and the lows of the session, and offer traders an opportunity to participate in a move that will offer them some kind of asymmetrical risk reward setup. So as we always approach the most recent swing lows or swing highs, so as the market has traded and swung up higher, we readjust our box as a new low of the day takes place. Again, the market will give us some kind of indication of either selling high or maybe buying low as an opportunity to enter the market, usually within that first 12 candles. And again, each day we look at the number levels that we're trading off of. I talk about the Asia box being in that 25 to 50 pip range. We redraw our highs and lows. We look at the numbers. Is there any significant numbers like double zeros that are here that potentially could be a support or resistance area? As we get to that last third of the Asia box, we want to be drawing our intraday highs and lows. And as the market trades, look at how it reacts around those levels. Has there been a stop hunt? Is there a retest of a low and any indication of a hammer or a railroad track or a pin bar to buy or sell? So again, you can see how the market reacts. It goes up to the high of the day, gives an inside bar. This is just after the London Open. Consolidates around the numbers. Our 12 candle window is over. Come back into the US session, same sort of thing. I look at the first 12 candles between 8 a.m. and 11 a.m. New York Eastern Standard Time. Then the next day, again heading into the last third of Asia, we redraw our previous day's most recent highs and lows. That's where stop losses will be placed. That's where breakout traders will enter the market. So there's pending orders that will be placed above that. As the day evolves and new swing highs and swing lows come into the market, we readjust those levels. As Asia trades, we now have a swing low as a low of the day and a swing high as the high of the day from the Asia session. Again, we're looking for some kind of, there's the London Open, some kind of buy low hammer or sell high pin that would give us an opportunity to target the other side of the range. So you can see anybody who potentially may have sold up top on that first reversal, they didn't have an area to go to break even, but if they'd filled the gap on the stop hunt, they could have went to break even at any point where the gap has been filled. But on the second mouse, as soon as it's cleared that level, same thing. We want to go to break even. Again, as I mentioned, this is the most vulnerable area for the market to reverse and go the other way. So if you haven't gone to break even, you potentially then will either get stopped out with a loss or a chance to get out with a smaller loss. So again, each day, there's the M pattern up top on a stop hunt after it's taken out. The overall highs of the day, Asia trades. We just want to redraw our box. If you don't have a swing high that's recent, I would use the swing low as a potential high of the day now, as the support that was there will now become resistance. Oops. And again, the previous low of the day is still there. The Asia market has taken that out. So we would redraw that at the Asia low. And again, we see the market break out, pull back, consolidate, fill more orders, and then go into the US session. So again, there's going to be days where the market breaks down, goes sideways, and then continues. But this Asia box gives us a lot of information when you start to study how it handles trading around the low and the high of the day. So again, if you need to redraw your highs and lows, when you've got a swing low coming out of the box and nothing has been hit in terms of a tradable range, then we're looking at stuff like the London Open. But the market broke out of the box, issued 3 stop hunt candles down, which was 50 pips. As you can see from the numbers from double zeros, actually that was 75 pips down. The market now we're 50 pips outside of the box. It gave us a hammer down low. Traders can have the opportunity to make a decision if that's a trade where they're willing to take that trade at the bottom of the range back to do the stop hunt to fill the gap of the London breakout trader. So again, just reviewing, set up your own daily template that you can cookie cutter. That 12 candle rule for me is critical. Most of the time there will be a trade coming out of that Asia, last third of Asia, where the market will give us a 12 candle window, a 3-hour time frame, where it will give us some sort of pattern based on how the market trades around the high or the low of the session, which can allow us to target an asymmetrical risk reward opportunity. So hopefully you got some value from today's video, traders. Again, I'll include the I sessions indicator beneath, down below, and the sweet spots, which is for the number levels. And hopefully this helps. Keep the questions coming. I appreciate all the great feedback. If you haven't done so, go to my homepage, get my 7-step daily routine for high-performance traders. Ritualize yourself. Keep getting better. Study the smart money. Build your playbook. Master 2 or 3 simple setups. Keep it duplicatable. Keep your risk reward skewed in your favor. And may the markets go with you. Have a great trading week.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.